My name's Mike Bigman, Farm Credit, Northwest Florida. Who the heck is Farm Credit? Actually, Farm Credit was started by Congress some 100 years ago, a little over 100 years ago, and by the Farm Loan Act of 1916. And basically the reason the Farm Credit system was started was to, at that time, they were having difficulty getting capital and credit out to rural America. So the Congress recognized this, and they created what they called back then the Farm Loan Act of 1916. And over the years, this thing has evolved into what is known today as the Farm Credit System. And we were what is known as probably the very first government-sponsored enterprise. We are not a government entity, so please don't confuse us with a government entity, but we are a government-sponsored enterprise. And so today, the Farm Credit System, we're in all 50 states, and we provide credit and capital to rural America. And as you will hear in just a few moments, we can do some other unique things as well. But we're quite large. We probably provide roughly a third of all the capital to what you know is your big farm operations, your processing plants, things like that manufacturing plants that have anything to do with agriculture. Farm Credit probably provides around 1/3 of that capital. And is about a $300 billion system today. So that's who Farm Credit is. Now, we are unique from a commercial bank. We are a member-owned cooperative. The Farm Credit System, we have associations in all 50 states, and each association is a member-owned association. We, like a bank, may have shareholders either publicly which are publicly traded and or private, whichever the case may be. We are owned by our members. So one of the things that makes Farm Credit unique versus a commercial bank is that when our customers make a loan with us, they become members of the life of that loan. One of the things that's in your packet today is a little brochure. It's called the Patronage Refund Program. And what that is, just think of it as a dividend. And so what we do on an annual basis is we basically redistribute back to our members, not necessarily profits, but a portion of the interest that our borrowers have paid into us. We redistribute it back to them. And it's explained in this little brochure. It's kind of a unique concept. It's kind of cool. So let me give you an example. You borrowed $100,000. Your rate was 5.5%. The last 3 years, actually, we've redistributed approximately 20% of the interest that our borrowers have paid into us. We have redistributed back to them. So in the form of a dividend or patronage, we call it. So what that means is, if you think of it this way, if you have a rate of 5.5% and you're getting 20% back, then your effective rate becomes 4.5%. So that part's kind of cool. So, one of the things that's unique about us is, I'll talk about closing costs and stuff like that here in a minute, but I wanted to just kind of explain, who we are and what we're about, kind of the origin of the farm credit system. Our association, we cover the 18 counties in Northwest Florida, from Escambia County to the west, all the way through Madison County to the east. So we have quite a large geographic territory that we cover, with our association here locally. So with that said, I just want to move quickly through some things that this is kind of our mission statement, if you will, of Farm Credit, and that is to get out to the rural communities and provide that stable, consistent credit and financial services. And I'll talk more about that in a minute. Okay, you can go ahead. Okay, why with us? We talked a little bit about what Erica has put on screen as an interest rebate or our patronage program. First of all, you get the local service, the associations that you work with we are here on a local basis. We don't have to go to, some outside, centralized, agency or home office to make decisions. We can make that, on a local basis. We do have a wide variety of options of financing, a lot of options that, a lot of people don't know about. And, as Ken alluded to, we like to think of ourselves as kind of the rural experts, because that's what we do. As y'all know, if you go to a traditional bank and a loan that's going to be underwritten by Fannie Mae, Freddie Mac, things like that, there are restrictions on acreage. We're not necessarily bound by that, even if there's a home on it. So there's some niche things that we can do that perhaps there's others that cannot do. Okay. All right. So as I mentioned, and I'm not going to regurgitate some of these things, but basically, we can do land purchases, refinances. We can do improvements. We periodically do barns. Nowadays, we're seeing people that's wanting what we deem a barn dominium, where basically part of it acts as a barn. They live in the other part on, say, 40, 50 acres, something like that. Land preparation, things of that nature, heritage property, anything, purchases for your lifestyle that's driven toward, the rural lifestyle and agriculture. Now, I want to stop right here and talk about, because Ken alluded to this a little earlier about I think it was the 4-acre piece that he had listed. Now, there's two things that drive whether or not we can make a loan to a member. One of them is called the scope of financing, and the other is the eligibility. And so, first thing we have to ask when somebody comes to us is this an eligible property for farm credit? Because of our mission that was established by Congress many, many years ago, we are not able to finance some things. For example, if Ken come to me and said, "Hey, Mike, I've got some investors and they want to build a new condominium complex, here in Fort Walton or Destin." Guess what? We can't do it. That's not what we do. So the first thing that we do is we look and we see, and I'm talking right now mainly from the agribusiness side. Is this a property that we can do? And the answer to that most of the time is, does that property have the ability to generate agricultural income? And you'd be surprised, the types of property that do. I will tell you that within the past year, I financed 2 acres of hydroponic nursery in Walton County. Most of the time, if you look at 2 acres from an agribusiness standpoint, that would not be an eligible property. In this case, it was, because it was a going concern. Turned out to be, so far a really good deal. So that's an eligible property. The other thing is, and this goes to the 4-acre piece that Ken talked about earlier, and that is the scope, in other words, the purpose of the loan. So let's take that 4-acre piece, for example, and let's just say that someone's going to purchase that 4 acres. Now, he also alluded to there may be some restrictions based on zoning that prohibits certain things. So that's something important we all would have to check into. But let's just suppose that same thing. Let's just suppose it's just zoned as vacant land, which we can do, or perhaps even at 4 acres it may be zoned agriculture. I don't know. But let's just suppose that they want to go in and they want to build a couple of duplexes in there. From our standpoint, chances are, that would not be an eligible deal for us, even though it's 4 acres. On the reverse side, go back and this person's going to go in, build some a couple of greenhouses, maybe some aquaponics or hydroponic type operation, something like that. there again, all of a sudden, it's something that we could probably do and help you with. So I just wanted to make that distinction, while we had that opportunity. So, all right, very quickly, I'm not going to regurgitate this because most of you guys probably know this already, but I just want to go over very briefly, like when we look at like a land loan, for example, what are we looking for in terms of information, and why do we ask for it? Because a lot of people have this question. So go ahead, Erica.
Also in their packet is is your checklist as well. So it's all
very
in the
good.
packet.
Thank you.
Mm-hmm.
All right. So basically, we're no different than somebody walking into, a big commercial bank wanting a large commercial loan, or perhaps even a home loan. I mean, honestly, the more information that we can get, up front, leads to a speedy process. I will tell you that we take that very seriously at Farm Credit. And Lisa will tell you that, as a matter of fact, if a loan takes more than 45 days to close, for whatever reason, we have to provide a report to our board, and they ask questions, and that's how serious we take it, because we want our members to get really good service, and if there's a reason, especially if it's an ongoing reason, we want to identify it and hopefully cure the problem. Now, sometimes because of surveys and some of the issues that Ken addressed earlier, there's just no way around it. It requires an extension, requires more than 45 days, but the more information we can get, the quicker that we can turn a loan around. So, with that said, in most cases, now this says 3 years tax returns, but I will tell you that for loans of less than $400,000, for loans that's less than $400,000, we have a little bit more simplified underwriting process than what you might see here, and that is we only require a couple of years of tax returns if it's just a W-2 type person, just their W-2s and a pay stub, and so it's fairly quick process. And as Eric alluded to, I put kind of a sample checklist in your packet so you could see, but oftentimes we run into situations where maybe it is a larger transaction, because we certainly do the 40-acre deals, and we do a lot of those, but sometimes we do some large, also some very large, land deals and operations. So, in that case, we do require 3 years, and if it's a new startup business, we do require, kind of a pro forma income statement, cash flow, and we do like to have a balance sheet, with some details. A lot of times, this is something that holds us up, or holds an analyst up. Well, we'll have some people give us a financial statement, but just very limited information. And either you have to make some assumptions, which always might not be in the borrower's favor. So either you have to make assumptions, or you have to go back and make another phone call and try to get a schedule of debt or something like that if it's a business. So it becomes a more cumbersome process. And there again, if it's just a salaried employee, just W-2 or some other outside income. Now, a lot of times, as I mentioned earlier, like the nursery down in Walton County, when we were working with them, right up front, they were able to give us some really good detailed production information. Broke it down by category of what they sold, things like that. They're basically provided not only their production information, but as the last bullet point says, that kind of their business plan. What they do, what they're about, some of the people they sold to, and who their clientele are. So it made it a lot easier going in up front to look at their situation, because we had the detailed information. All right. So where does it come from? Well, unfortunately, there's not a lot that we can do. I often sit down with people and help them with a financial statement or balance sheet, sometimes even an income situation if it's a production type situation. But honestly, it comes from your records, and that's why good record keeping is so important. We work a lot with some fairly sizable large farm operations, and one of the things that we struggle with is that farmers are really good at growing crops, and they're really poor at paper and keeping records. They hate it. And so every year, even though we've done business for years and years, every year when we try to reconcile what we did the year before and develop the plan for the next year, we really have to spend a lot of time with them because they hate it. So what we're really trying to do, and what I would encourage anybody that has any type of agricultural or any kind of business, there's so many good tools nowadays. And the only thing I would say is utilize those. Then when you come to somebody like us or any other banking institution, it just makes it so much easier if you have good records. All right. So why in the world do we need that? Well, like anybody else, the first thing that we've got to do, I hear so many times, especially by older people, especially in the land buying process, is that, well, I can get this 40 acres for $80,000 and it's worth $150,000. Well, first of all, I think Ken and anybody else associated with marketing or selling will tell you that usually, the market price of anything is what a buyer's willing to pay. So, when you tell me it's worth $150,000, but in their mind, that we have plenty of collateral. Because y'all know that in the old days, somebody could walk into a bank and they had collateral. They could get a loan. Well, over the years, things have transpired, and there's been consumer protection rules. There's all types of other things that's transpired. And nowadays, I can tell you why collateral is important and necessary. The most important thing is can the borrower repay the loan? And so that's why, we ask these questions. And I will tell you that, while there are certain companies out there that probably have a kind of a box way, they'll put you in a box and maybe put you in a certain score, and you either pass or fail. I will tell you that in most cases, here we don't do that. But we still look at what they call the 5 C's of credit. Number one, are we working with a person that has character? Number two, talking about repayment ability, do we have a person that has the capacity to repay? And then thirdly, capital. Does that borrower have the resources if something goes wrong, if something goes awry? Does that person have the resources to keep going, or at least hang on long enough that we could do something and help them restructure or something like that? I'm going to talk about that in just a moment, a little further. The other part is collateral, and based on some of the comments Ken made about collateral, I'm going to defer that to a little bit later in questions and stuff. And then conditions. What are the conditions around us? For example, I keep going back to the nursery in Walton County. Well, based on what these people grow, do you know how many restaurants in this area use, and I for the lack of better language, I'm just going to say the fancy little green vegetables and things that's used in foods here along 30A, and well, the conditions, they're in the right place at the right time because the conditions warrant for that. So, and I'm going to talk about a little bit about that in a minute. So, what is some of the key points in obtaining, either a land loan or if you're looking to develop some sort of agricultural business? First of all, we look at all the risk associated with it. Some of the things are all the things that we talked about earlier. It goes back basically, at the end of the day, if you remember those five C's of credit that we talked about, those are all entailed in part of the risk assessment. And we could really digress in this, but I'm going to keep that kind of general for now. And I'm not going to dive off into these ratios in particular but I just want to tell you that some of the things that we look at that's very important, the equity position of our borrowers. And you say, well, what do you mean there? And that's basically, when you turn in a financial statement, it's basically what you own versus what somebody else owns. In other words, a bank. So let's just take, for example, if you come in and you're developing an operation and you have a 70 or 80% equity position, meaning that you own the 80% and somebody else, you're only leveraged at 20%, well, what that tells a lender is that, you have sustainability, because if something goes awry, we have something that we could work with, perhaps to restructure. It also lends, some credibility to the way that you've handled your debt in the past. So the other thing is working capital. Well, what's working capital? Basically, working capital, if you took your current assets, which is bank accounts, receivables, things like that, and you subtract out the current liabilities associated with it, that's what you have to work with. And those are some of the types of things. I'm going to kind of read past the others for now, but those are the times, and there's kind of the formulas, I guess, for how we look at that. And y'all, I'm not going to bore y'all with that. That's some of the things that we were talking about. So, okay, go ahead. So, some of the things, if you're dealing with somebody, and I understand, ma'am, that you're a realtor, so if you're dealing with somebody that wants to develop a plan, this is some of the things that we're going to be looking for. We're looking for a business plan if it's a new operation, and if it's existing, we're going to be looking for some historical, information, just like a business owner would. If you were to go in and you want to buy, XYZ's mom and pop's grocery store, before you made that purchase, you're going to want to know, some history, some financial history, on that entity to see if they have been generating some positive cash flow. Make sure you understand your financial situations. This is something I was going to go to on the capital part, where it says build cash reserve for working capital. I will tell you that unequivocally that the number one reason that I see businesses and farm operations to fail or struggle is because of working capital up front. Go in way too skinny, not prepared, and try to leverage everything up front. And when that happens, y'all, everything has to go absolutely perfect for it to work. Because the first little hiccup, the bump in the road, you don't have anything to fall back on, and it makes it very, very difficult. The other thing that we talk about, stay on top of your credit history. Everybody knows nowadays all the fraud going on and everything. There could be issues out there, and you could walk into your lender, and this has happened, and all of a sudden, you're coming up with a very low credit score, and you're saying, "What? I've had perfect credit," and all of a sudden, somebody has committed some fraudulent acts on your credit, and it shows up on your credit history, and you're not even aware until you walk in somewhere. So there are resources nowadays. I would say to be careful, or else, because everybody's trying to sell you something, and they always have an add-on where you have to pay a little extra. But there are ways that you can stay on top of your credit and not impair your credit score. And then lastly, really, really plan ahead and have a business plan. I'll share with you very briefly, in my own family, something that happened recently. My daughter decided to start a online boutique, clothing boutique, and I'd heard some wind of it, but she had not consulted Dad about anything, okay? Well, the first thing I know, she's kind of getting this thing up and going, and so we were sitting there one day, and so I started asking her some questions that she should have known the answer to, but she didn't.
I hope she's not watching right now.
Well, yeah, she'll be okay. We've had this discussion. So basically, what it boils down to is I went with her to a local college. They offered the Small Business Development Center offered a class, on starting up and things to do and things not to do, things to look for and things like that, and developing a business plan. And so, my point there was, had there been, a little bit further planning ahead, we could have avoided, some issues, up front probably, or she could. So, always think about that. Okay, go ahead.
And you have resources that you could give your clients and everything to go and get that information.
We do. We've got, we can give you resources and help guide. If we don't know, we can guide you in the right place, usually. And we're pretty good. If we don't know an answer, we'll just tell you we don't know, and we'll try to get you in the right spot. So the other question, or the thing I wanted to cover today, because buying land is different than going in and seeking a home loan, I wanted to talk a little bit about the process, because oftentimes people come in and say, well, what happens, after this? Or, what is the process? And so I just wanted to briefly go through this. And basically, our application process is fairly simple, on a land type loan. So you come in, you make an application. Well, there's two things that can happen. There's two ways that, because oftentimes, as Ken will tell you, that when you're buying a piece of property, the realtor and or the seller wants to know that they have somebody serious, that they have the ability to purchase that property. So one of the things that we can do on a very quick basis, when I say quick, usually within hours, is if we have enough information through a financial statement. Maybe we don't have all that laundry list of things that I was showing you earlier, but based on what you're telling me, sometimes I do this over the phone, we can pre-qualify you. Now, when I send you a pre-qualification letter, there's going to be some disclosures on there that say, hey, well, this is all based on if we get this and things that you have disclosed to us up front are true, then yes, you qualify. So usually we can get somebody one of those really, really quickly, so that they can go ahead and get that process started, and then we gather the rest of those things that we talked about to go through the underwriting process. So that's the pre-qualification, and then a full approval is once we have those items that we've requested, then depending on the size of the loan in our association, the request, if it's up to $400,000, we'll go through a credit desk. If it's over that, we'll go through a credit committee. Either way, I'll tell you that we have processes now that we can turn that around really, really quickly, usually within 24 to 48 hours if we have the things that we asked for, like we were discussing earlier. So we have an approval. The next thing that we do is we send the borrower a commitment letter or an offer letter, and basically that just outlines what we're doing. Who the borrowers are, what the loan amount is, what the collateral is, are there any conditions. We go ahead and disclose up front any fees that's associated, from Farm Credit, as well as, a lot of times we don't know exactly at that point what the title fees and stuff are, but as much as we can disclose to you for you to say, yes, I'm ready to move on, we'll go ahead and do that. A survey, and that's something that Ken was alluding to earlier, and I want to just say that in most cases, there is a survey. I would tell you that on rural properties that has good legal and physical access from either a state or county maintained road, Farm Credit does not always require a survey. However, I would say that it is recommended. I'll tell you why. There's a couple of reasons. Number one, we're dealing with a situation now where a borrower bought 50 acres, I believe over in Walton County a couple of years ago, and chose not to get a survey. And what's funny is I remember I went to the closing, and at the closing table, we discussed this. And they were talking about a landowner that was already, they hadn't even closed, and an adjoining landowner was already kind of hard timing them about a fence and this, that, and the other. And I remember us talking about, well, it might be a good idea, to get a survey. Chose not to. Well, guess what? As Ken said, now they're going to the title company for a dispute, because obviously the title company, underwrote this thing, and so now they're having to go through that process. Had there been a survey up front, defined, boundaries, legal, everything, that's some of that could have been avoided. So, pretty important. The other thing I want to say about a survey, and I was trying to write down some things that's practical to you guys, but in terms of structuring your land contract, recently we've had some deals where the contract will say, and even the listing will say 40 acres, okay? And the buyer will say, well, look, I want to get an appraisal first and find out what it's worth and make sure that it's in line with what the offer is before I spend the money on a survey. Well, a lot of your land contracts are structured, the wording says, as per surveyed acre. So let me tell you something, that happened recently is, we had a situation where the borrower had requested of us to order an appraisal prior to the survey for the reasons I just said. Well, when the survey come back, it was approximately, I think it was like 2.5 acres more than what the listing and what it said on the property appraiser site, things like that. So what happened is the contract and what the borrower and the buyer did not remember in the contract was it strictly said per surveyed acre. So it didn't have just, it had a price, but it also stipulated, I don't know the exact amount, $3,200 an acre. So, in this case, what happened was the buyer had their money all together for closing, right, ready to go, and then all of a sudden, we have a delay because they have to come up with more money. Or either the seller has to agree to come back. Well, guess what? The seller is not going to do that because they stipulated in the contract that it was per acre. So something to be aware of when you're dealing with land loans. And the reason for that is because unlike platted subdivisions in town where you have, 0.2 acre or half an acre, in most cases that it's been platted out, it kind of is what it is. But let me tell you, when you get up into the rural regions of our counties, Walton, Santa Rosa, Okaloosa, when you get up into some of the rural areas, Ken alluded to this, some of these things, properties have been in families for years and years, and there's been roads cut through since then, and some of the minutes and degrees, oftentimes it would almost be ironic if it was the exact acres that stipulated on the property appraiser side. So that's all I'm going to say about that, but I do want to kind of let you know how we feel about a survey and why that's important. The next thing that we do is we'll put out bids on appraisal. We have some state general certified appraisers that's been approved by our association, and so typically we'll put it out for bids and try to get our borrowers the best price on the appraisal. We select that appraiser, and during that time frame, unless there's been some other sort of something that's come up, we'll go ahead and order the title work, like Ken said, and try to get that going. And then as those things start to come together, kind of the last thing as we move toward the closing is, most people, they want to know, well, how much do I need to bring to closing? Well, what about this? What about that? So, as quickly as possible, we like to get them a settlement statement, a HUD, they call it. We like to get them a settlement statement out so that they can see exactly, what's in store for the closing, and then we schedule a closing date. So, I just wanted to kind of go through the process. It's not quite as cumbersome as it may look there, but a lot of people say, well, what happens after we do this, or when does this occur? And I just wanted to show you kind of a little bit of the order that may happen, once you make application. So, all right, is that?
I got the video.
You do have the video.
We'll just say, now we have examples of rural properties and what Farm Credit's about and financing. Just a little 30-second commercial that we've recently developed with some other Farm Credits.
Come on. Hold that thought. Okay, let's go ahead and do questions, and then I'll have that up for you in
Okay.
just a moment.
It's just pretty cool. We've just recently developed, as Lisa said, a brand new commercial that'll be airing
It's the middle.
very soon. And
Can we throw this out on the our Facebook page now?
Can I get it with just our logo? We're in the process of removing the other Farm Credit logos. This was with Land
okay.
Leader, which is RFD TV, and it's a joint commercial.
yeah, we collaborated with some other.
I think no problem. We're limited on sound.
Hang on.
Sounds not up on it.
Oh, it's on my computer.
Scroll that.
It's not hooked up to our stereo system.
I'm a little low.
Well, it's, the sound's coming from the
Hold on.
from her laptop.
Oh.
And I can't move it because it's gonna.
The farmers, the ranchers, their cattle and crops, weekends in the woods, blueberries, peaches, a fishing pole, and grandpa's rifle. That's thrives. For more of our lives, our children, it's about making this. We've been financing your life for more than a century. With our farm credit, we're here to help you grow.
Okay, kind of like looking at pictures in the book with our children. So we're pretty pictures, but anyway, it's really good, really well done commercial. We just had that done recently. I just want to cover very briefly, then I'm going to open it up for questions. That's the reason that we're here. We want to answer any questions any of you guys may have. But based on some things that come up when Ken was speaking, I just want to talk, just briefly. I talked about the scope and eligibility. We talked about the wetlands a little bit. That's another consideration, when you're buying real property is, the wetlands issue. We've had that come up recently where, there again, we had a buyer that had agreed on a certain price, and, when the appraisal come back, the appraiser actually discounted for wetlands, but the buyer didn't feel like it was enough. Well, as Ken alluded to, in certain situations, especially here in Florida, there are certain situations where wetlands are actually attractive to people, maybe for conservation reasons, for wildlife, for whatever reason. So, generally speaking, it would have to probably be 50% or more, to get any sort of deep discount, off of the value, for wetlands. I talked a little bit about the contract. If you do decide to structure a land contract, read it. Have some professional like Ken and them help you with it, because otherwise you can have some surprises when you get close to your closing. Releases, oftentimes, we'll have somebody with a large tract of land, and they'll come to us, and maybe they want to give some to a child, or maybe they want to sell a portion of it. Just bear in mind that we talked about the backyard a lot. So if you can just imagine, a 40-acre square, and somebody comes to us and they have 10 acres in the front corner, or even in the middle of the property, and they want to sell that. Well, what we look for, there's two or three things. Number one, is do we still have access to the property, and sometimes more importantly, is the property still marketable? Because sometimes a person will come to you, with a release request, and what they're asking for, they're asking you to hold basically a donut, if you will, and it's just not a practical situation. So we do releases all the time, but there are some things that we have to have when we do that, and we try to discuss those things up front. Feasibility. I wanted to put kind of an asterisk beside that, and that goes to what Ken was saying earlier. When you have a period of time, whether it's hopefully you have built in a financing contingency in your contract, but use that time, if there are wetlands or some other issues, that's the time that those things need to be brought up, because it's just not good for anybody when these things are brought up, toward a closing. The other thing I wanted to mention, as far as closing costs, I've had this question recently. A lot of times if you're buying a home, especially if it's a refi, you can roll in your closing cost if there's enough equity. You can roll in your closing cost. Generally speaking, on a commercial or agricultural purchase, we cannot capitalize closing costs. So therefore, on a purchase, you have to pay your closing costs, out of pocket. So basically, at the end of the day, what you're looking for is you have your down payment, whatever that is, plus your closing cost is what you need to have available. And that's the reason some of those bullet point items we saw earlier, as far as cash reserves and having enough capital, is important, because a lot of people don't realize. It costs. When you go to buy anything, in particular, land or real estate, it's expensive. So just be prepared. Now, on the flip side, if you own some acreage, already own it, and you're wanting to do some improvements on it, like some of those things we discussed, and there's enough equity, yeah, we can roll it all in, for you and go on just like other deals. The only other thing I'll mention before I start taking questions is zoning. Just be aware of that when you buy a piece of property. Ask the questions up front, because we have seen recently where there was a piece of property that maybe was zoned ag, but after it changed ownership, all of a sudden the designation, the new owner had to go and petition to have it kept in the agricultural zoning category. So just be aware of those types of things, that when you go to buy land, that ask the questions up front, so you don't get caught in a situation where you have limited access or limited use of the land is according to what you wanted to buy it for. So
why did they change it?
I don't know. It's relative something new. This actually happened in Santa Rosa County, and it kind of caught us off guard, because we had never run across that. And so the property, it was like 26 acres in a fairly rural area outside of town, and it was zoned agricultural, and so the guy actually got a letter after everything had closed. It was probably 3 months after he actually received a letter
From who?
From the county about the
For the taxes.
I wonder if that
Yeah,
has
from the
something to
taxes.
do with Agenda 21.
I don't know, but it kind of caught me by surprise. He was asking me about it, and he actually had to go and petition. So it's something new. I was like, I've never heard of that, but it's but as Ken said, there are definite advantages tax-wise to keeping it agricultural. So those are things, make sure, according to the county that you're purchasing in, that you ask those questions, up front, and let's try. And if you don't know, usually, we'll have a contact in the area that we could find out, according to the property that you're purchasing. And that's something that we're kind of looking at now when we loan in Santa Rosa County, because we don't want to mislead anybody, about zoning or anything else up front. So.
With legislation, we've had it come up, some counties in Florida, to keep the new owner, to keep the ag exemption, has to show what ag they're going to do. So you would and that's where your business plan would kind of come into key. If you're going to just have timber on there, even if you're using it for recreational, the timber will help you keep the classification if you don't want to actually grow a commodity or have livestock. Then if there's timber on there, you can have that. Or if you're going to rent part of the acreage to a farmer, then you're a landlord of ag property. But a lot of them are now requiring from the legislation that you have to justify, because too many people would buy commercial property, throw a couple of cows on it, and then put a development on it, but yet got the ag exemption. So to protect the farmers, that's why a lot of them have gone back to
And that's actually fairly common in other states. When I was putting together the checklist, actually, if you look under the taxes, I put in here, does the current owner receive any special tax credits or incentives for having the property assessed as agriculture? So other states run into this many, many times. So it's happening over and over and again. So you may have to provide some of those documents to be able to keep the that type of assessment.
Mike, two questions for not only here but in the audience. What is the terms and the loan to cost option? Because this is probably more key because of the larger acreage, which most banks can't touch.
Right.
And the other question is, because a lot of our viewers are actually military, I know there's some veteran type incentives as well. If you could hit on those two subjects.
Okay. Let me just touch very briefly. First of all, for qualified buyers, we do, one of the advantages of Farm Credit, because of the way that we're funded, we do have the ability to offer long-term fixed rates on land. So typically, and I'm not saying we don't do longer on exception, but typically, most of ours are 15 to 20 years. On a 20-year fixed loan for qualified buyers, we can loan 80% of the purchase price or the appraised value, whichever's less. If we go 15 years, we have the ability for qualified buyers to go 85% of the purchase price or the appraised value, whichever's less. So, we do have, and we can do anything in between, by the way. We can do a balloon note if we need to. Oftentimes, the types of buyers that we have, we don't do many balloons at Farm Credit. Most of ours are fixed rate, long-term fixed rates. But we can structure anything in between, for a particular buyer. As far as veterans go, we do try to give, consideration, to veterans as far as, right now we don't have, since we just changed our advance rate program, I don't know that we have there's not really an advantage as far as an advance rate, but I will tell you that we do, have some other programs that we participate in, for our veterans. We have our homegrown program. Lisa, do you want to just briefly tell them?
The Homegrown by Heroes program is for veterans. It's a sponsorship by Farm Credit Northwest Florida with the Veteran Coalition. And what they do, if you plan to do any kind of ag on your property where you're going to sell your product directly to the consumer. So a lot of people now are growing food. You may do honey, so you're going to raise bees, or you may do a few small vegetables, or maybe you're selling homemade jellies or jams at the farmer's market, and you may only have 5 or 10 acres and doing that. You can still produce a lot. If 51% of your entity is owned by a veteran, then they will help you get a label to put on your product that you're selling to let them know that it is raised and sold by a veteran. So it's showing that support. We'll also provide a sign, and this is all funded by Farm Credit. The Veteran Coalition, though, will provide you business tools, recommendations, and networking with other veterans, and it's all at no expense because it's funded by Farm Credit. So it's a lot of networking places where you can meet farmers in other parts of the United States doing the exact same thing that you do. So it's just a great resource and a marketing tool that when people go to a farmer's market, people love to support the farmers, but they really love to support their veterans as well. So you kind of got a double-edged sword, and it would give you a competitive advantage. So, and it inspires other people to team up with veterans because we only have to count 51% ownership of the veteran.
Is the shooting range a qualified? And I'm serious. I mean, we have a number of people who have large land where they're military folks who they do a lot of shooting because of in the middle of missions. But if it can, is it something that could qualify as a?
Are they growing crops on it?
You have to be selling something directly to the consumer.
Sell them honey while they're out there.
Now, I think timber is even a qualification on, but you have to have some type of consumer type business plan. But you can talk with the Veteran Coalition because they approve it, and you can go to our website, which is farmcredit.nfl.com, And on our YBS page, there's a logo at the bottom, Homegrown by Heroes. And if you click on that, it'll take you to their website. Also, there's a brochure link in there about the program. And they'll be glad to answer and help you get your certification for your label or provide you any business planning tools, all free of charge.
One of the questions I had, and I'm sure I have a few clients that might be watching, is let's say they buy the property and it's agriculture, but it has the potential to be a residential development in the years to come. Mm-hmm. How would that play in if they have it funded through your program at present? It's eligible, and they choose to maybe get offered some money to put a small residential development. How does that affect your loan?
We've actually, had that happen, in the past. There's not, once the property is secured, we, to the best of our ability, our goal, our mission is to keep it, in some agricultural state. Unfortunately, sometimes after a series of years, if somebody chose to sell it to a development or developer, there's not a lot that we can do at that point. We've got a few of those. When I was talking earlier about releases, honestly, a lot of the releases that we do are related to something like that that's happened along the way. So, we hope that people's intent, is genuine up front as to what they're going to use the property for and the intent. Unfortunately, if we finance it in years down the road, it ends up, in a development.
I'm so sorry.
So there again, the intent at the time was I bought it for agricultural reason. 10 years from now, someone says, "Hey, let me come in together and let's do a small development." And they still continue on with your loan, or are they pretty much going to have to do something with their loan?
No, as long as they continue current with our loan, because trust me, we've had that happen along the way.
Okay.
There's not really much we can do at that point. Especially if it's a good loan, we hope they continue to perform. But there are circumstances where people kind of tell us up front, this is what we're doing, and we just pass. But that happens. So.
What if they had the hypo? Where's that word?
Hydroponic.
Like if they had the gardens and a swimming pool and
Marijuana fields.
Then most likely, we could make that, an eligible type.
because more people
property.
are going
Right.
towards hydroponics.
We're actually looking at a situation over in our county that where there's going to be a development, but it's going to be a horse farm. It's going to be the gardens where they're growing their produce, things of that nature.
I like that.
So there are some around the country. I saw one on Discovery or somewhere that's out in Oregon here a while back. So those things are becoming popular. This one has not come to fruition yet, but most likely, that is something that we could be involved in because,
Growing something.
With the ag
from the agricultural.
That leads in, and believe me, I've had this question brought up a number of times. What in that situation, pick the rural area, Mosshead or whatever, let's say you take a medium, 100, maybe 50 acres, and you want to develop a development where there's an equestrian center on it. Is that something that's sort of in the mix, or because there's a host of folks that would love that? You get them large lots. Oh, by the way, part of it in the development is a equestrian center where there'll be, I guess there's some, it's almost like density. Hey, you got 20 acres, you're allowed 20 horses or whatever the number is. But is that something it's sort of a hybrid in that regard?
Well, remember too, it is kind of, to answer your question, that is kind of a hybrid situation. But secondly, going back to eligibility of the property and the borrower, oftentimes we work with people who are not full-time farmers. But by the way, if it's a full-time farmer, we can do anything for them. We can do anything. But the rule of thumb is the further away you move away from full-time farmer, the the more restrictions that we have. However, with that said, we have some, pretty prominent business owners that, because of their agricultural holdings, they have, makes them eligible to be able to do most anything like what you're talking about. I can think of one or two right off the top of my head that has thousands of acres of timberland and or, rural property. And because of their asset size of their agricultural holdings, that in itself, makes them an eligible borrower to do further things like that. So,
Speaking back to our veterans, now, if you do a rural lot, like your 4.6 acres, or buy a home, then we have the VA program for our home loan program and I believe the construction part.
VA construction firm?
Hmm?
You have a VA construction firm?
I'm not sure
I don't know if they can do the
exactly on
construction.
that.
Okay.
It's the regular VA
The
loan.
regular VA program, and then our fixed rates, the one-time construction perm, if they buy the home and the lot together or build, we can do a one-time fix for 30 years.
Oh,
during
30
the
years, wow.
construction phase with
So-
one closing.
So y'all have a home financing, a home mortgage department, as well as a land
we do,
financing.
we do,
But you go up to 30 years.
we do on the home loans.
Huh?
Are your rates really good?
I will tell you this.
Very, very competitive.
The reason I hesitate is because we were just talking about home loans. And I was confused. I will tell you that our home loans that are sold to the secondary market are very, very competitive. As to what you would see with other lenders. We do have occasions where we do loans in house. For example, if there's a home on a number of acres that kind of falls outside of the normal scope of a conventional loan, and we do it in house. Obviously, the rates are a little bit higher there, but I still think very competitive for what you're getting.